But when you talk about sectoral moves, it's been the road sector which has been buzzing off late, with the inflow in the sector increasing drastically. Let's take it across to my colleague Pankaj Podar. He's got all the details on what's working well for roads. Or Pankaj, I should ask, what's not working well for roads?
Well, Aisha, at least in the last 3 months, the activity in the road sector seemed to have picked up. In fact, in the last 6 months, the activity has picked up. What I've done is tried to find out what's happening in terms of road order. And here you go, this interesting table on your screen. And you can clearly see that FY17 has been one of the best years as far as awards of roads are concerned. Even in the construction of roads, earlier it used to be around 6,000. Before that, it was 4,000 kilometers. And now it's about 8,200. Now, the interesting thing is that for the first 6 months after GST implementation, after changes that were visible, you did see order activity slowing down. And then in the month of Jan, Feb, March, you've seen a substantial pickup as far as this is concerned. Now, why we are talking to Dilip Buildcon, or why Dilip Buildcon is an interesting one, because they have a very unique model. Firstly, their ROEs are highest in the sector, 24% plus, versus some of the others just being sub 20%. In fact, hardly any people are close to 20 odd percent. Company has gained market share. Company has gained market share in the new project annuity, which is HAM, and as well as since listing, it's almost up about 4 times or so. So Dilip Buildcon is clearly gaining some market share. Their order book visibility is increasing on the back of this road sector, and people believe that road sector in the next 2 years will see a lot of activity with the new launches, the sort of new projects that are expected to come, and Dilip Buildcon is one of the best way to play, and that's why the stock currently is at close to 1200 levels.
All right, now let's pick it up from where Pankaj left, that as of now it is completely clear blue skies for the entire road construction sector. And frankly, if you look at what the stock performance has been for a Dilip Buildcon or a NCC, with the exception of HCC where there are other separate problems because of Lavasa, road construction companies have been on a tear. Rohan Suryavanshi, Director Strategy and Planning with Dilip Buildcon, joins us now. Rohan, good morning. Thank you for joining us. Pankaj has painted a very rosy picture for the road industry. So I'm sure you're very excited and you would like to pick it up from where Pankaj left. Are things looking that great for the road industry?
Absolutely. The road industry hasn't had it this good ever. So, this year we've seen record order inflows even higher from what was a record order inflow last year. So we are at a very good space. If you look at it, personally as a company, our market share from the total NHAI and MORTH ordering has remained almost in the same region. Like last year, we had about 14.5% of overall market share of the NHAI and the MORTH. This year, it's gone slightly above 15,000 crore. But in terms of total order that we've received this year, we've almost doubled ourselves. So you can see how much the activity has improved, so that we are still at the similar order level. So it's been a great year. Kudos to the whole team. That they've been so on top of the game, and they've managed to give out so many orders.
15% market share is a very large market share.
Sure.
And you are competing against the likes of an L&T or an NCC or even bigger players. How come you are able to get such a large market share in such a competitive market where you got giants operating in that space?
No, of course, there are very, very good companies who we are competing against. However, what sets us apart is that we are present in 17 states across the nation, which no other construction company except L&T does. So, and this whole strategy of being diversifically spread across over the country has only happened because we do everything on our own. We use our own equipment, we have our own people doing it, everything is vertically integrated. So what we are able to do, no other construction company is able to deliver that kind of thing. So when we go and order anywhere, we are doing it on the basis of our strength, unlike other construction companies who have to find subcontractors there. So that's really what helps us. Along with that, we've been executing at a breakneck pace. From last year's top line of 5,000 crore, we are going to be finishing this year about 7,500 crores or so. So almost a 50% growth in the top line, which is, again, we are an outlier in the industry from that sense. So as our own execution pace picks up, we obviously need more and more orders to keep up with, future growth.
But Rohan, that's all in the past. Bank of America Merrill Lynch came out with a recent note, and they're saying that highway construction sector presents a very large opportunity, and they're putting some numbers here. They're saying there's going to be an over 2.5 times rise in tender pipeline versus the 3-year history. Do you think you can beat your last year's performance in 2018 as well?
Absolutely. I'm very confident because this is an election year. Now, the thing that gives me a lot of confidence is, number one, the budgetary allocation that has been done for the sector has increased from what it was last year. Number two, the highway, the ministry has decided that they are going to upgrade a higher number of state highways to national highways. Number three, they've reduced the traffic that is required from upgrading a 2-lane to a 4-lane. If you'd be very surprised that 75% of the roads in our country are still single lane or 2-lane. These are I'm talking about the national highways. Forget the other roads. 75% of the national highways in our country. So there's a huge opportunity, especially in an election year. I think the government has very clearly articulated its intent that they want to stimulate the economy as much as they can. They want to build assets, and this is what really gives us that kind of confidence.
The last time we were chatting, you said that land acquisition was a problem. Have things eased out there?
See, land acquisition will always be a challenge. The reason it is a challenge is because while all these projects are, for example, in our case, are given by the national government, like our order book, 99% is from the national government, but the land acquisition or environmental clearances, all the other clearances that are required are all a matter of the state. So what happens is that, you have the state government and their officers trying to acquire all this land while the project has been awarded by the national government and they've earmarked that money. So it's always, difficult when you're straddling between two different government agencies. So that's why it remains a challenge. I think the government has definitely improved it by leaps and bounds over the last few years. But sure, there are always, ways that they can improve it furthermore.
What works for you, Rohan, is not just the fact that you have superior execution capabilities, but it's also that you're being able to milk these projects at regular intervals, revenue and profit-wise. Explain to our viewers how the coming of the hybrid annuity model is helping construction companies like you.
So you're very right. We've been able to churn these projects around very quickly than the industry. Now, hybrid annuity is a new mode that the ministry came out. Now, the ministry's budget is obviously, they're constrained by whatever their budget is, because of which they need to go to the PPP mode. Now, what is good in the HAM model is that the government puts skin in the game. They put, say, 40% of the equity during the construction. The rest 60% is something that they pay through deferred payment of annuities. Now, this model is great for someone like us, who knows that, we are great at the execution part, and then we are assuming very little risk. Because we don't have to worry about how the traffic is going to grow from here to the next. We are taking, basically what we're doing is then we're taking the national government's paper and working on that. So it's a great model from that sense. It also provides comfort to the bankers that that whatever money they're accounting for right now will come in future. So overall, it's a great model for the stakeholders.
What is the kind of market share that you're targeting in terms of bidding for more projects under the HAM model?
We do not specifically target a market share in the HAM model. It's, all these numbers that I gave you, these are, for our consumption, but it's not like internally we like, oh, we need to target 15% or 20% of the total NHI ordering. Internally, when we think about these things, we think about, okay, how does our balance sheet look like? How much equity do we have? What are our growth plans? Where do we need to go from here? So all those things are what really dictate our decision, whether we want to take more HAM projects or EPC projects.
One large concern for entire road sector would be that PSU banks may not be lending aggressively. When we met a couple of chairmen on the record, the sense personally I've come back with is that PSU banks are giving a lot of collaterals, a lot of guarantees to road construction companies. And they might just take it easy because they are scared now to grow their balance sheet given how things have moved. Are you getting a sense, are you getting a hint that it may not be that easy to get credit lines going?
No, you're absolutely right. PSU banks, obviously, they've been fighting fires on multiple fronts. So, as a function of that, we've also seen that the sector, obviously, the kind of support that we expected or the national government expected is not there. However, PSU banks are doing this on a case-by-case method. Like for someone like us, who have a track record of doing all of their projects before time. Like if you look at all the portfolio, annuity portfolio or EPC portfolio that we've done, all my older PPP projects were done at least 6 months to a year before scheduled completion date. All of them were taken at a lower debt cost than what was the government estimate on those projects. So, stuff like that, it gives a great comfort. And then what happens in all the projects that we take, that the revenues are showed, it's an annuity, unlike the, tolling. It is definitely unfortunate that, the banks haven't taken as positive a stance on this because, if you look back in the last, upcycle, when they were taking bets on toll, which they had no idea whether they could fathom it or whether they could get it right. Here now you have the national government's bond essentially. So this is probably the best, paper that they can get.
How do I calculate a NPV? Because that's how you look at a road company or a construction company. Ultimately, I need to look at interest rates, calculate your cash flows, and arrive at an NPV. So in a rising interest rate environment, when you're backed by an annuity, how does the NPV move?
So here, the government has done a very good job in all these assets. There is a floating interest rate.
Okay.
So, it moves along with the RBI guidelines.
So you will have
it's a very comfortable position for the bankers.
So you will have the same spread.
Exactly, we will have the same spread.
Rohan, there's no denying that yours has been one of those dream stocks. If someone even bought it on listing day, they're all smiles right now, irrespective of the market environment. But the problem is also that there is very less float in the market. When is it that promoters will bring down that mandatory 1% stake down? It's a good problem to be with. Absolutely. For you, yes.
Yeah, it's a good problem to be with. So, obviously we can't, we are obviously very happy with the way things have panned out for us, and, with the way the markets and the investors have responded to our story. However, we would need to bring down the stake. The timeline for that is August 2019, because it needs to be done within 3 years. However, there are no immediate plans to do this. We will take a call on this as and when we feel it's, it probably makes sense, and we need to find a good way.
At 1200, does it make sense? Is the stock looking expensive to you?
I don't think it's a function of price. It will be a function of what our internal requirements might be. It won't be a function of price. Ultimately, whether I sell it at 1200 or 1000 or 1500 doesn't matter, because eventually we end up owning majority of the stake, majority of the company still, and we're invested in it. And this is the only business that we do. So for us, it's more important to keep growing this business. Ever since my dad has done this, what he's done is kept on only putting all the money accumulated from the business back into the business. So, we have no other sort of distractions.
But at 1200, do you think the stock is fairly valued, or do you think it's a little expensive?
I think it's undervalued.
Okay.
The potential that the company has.
I should have guessed the answer.
No, what about your average internal rate of return? What is it that you're targeting for the projects that you're entering into? Because, correct me if I'm wrong, but as more and more projects come in, there'll be a lot more players trying to garner some sort of pie of just the project size increasing or the order inflows increasing. So how do you manage to keep your profitability?
So you're right, there are more and more players who are coming in, and there are more and more smaller players, regional players who have larger ambitions right now. But what has helped is this overall pie has also increased in the same level. Like, when I mentioned at the start that, even though our percentage share in the whole business has been same, the orders that we received this year is actually more than the total order book that we had at the end of last year. So it's larger than that. So that is always a function of how the industry is. What you need to do as a company is go bid for projects at the right time, make sure that you have a healthy order book. Like right now we have a 3.5, 4 year forward looking order book. So we are not really in a hurry to bid orders at an aggressive rate. But yes, industry will keep moving, have its
But is
highs
there a
and lows.
target? Is there something that you work with on a return basis?
Yes, we do. We have, whenever we take EPC projects, HAM projects, there are different targets that we work with. But, if I were to simplify it, I think on an EBITDA basis, we look at about 17-18%, and that's what we worked with in the last few years.
Okay, appreciate your time. Good luck,
Thank
and
you
thank you
very
for
much,
stopping by to our studio.